Right now, while you're watching this, the entire foundation of British housing is being quietly torn down and rebuilt, and most people have absolutely no idea it's even happening. And what's being constructed in its place? That will determine whether you spend your life building wealth through property, or trapped inside a system designed to pull every penny out of your pocket. Stay with me, because what I'm about to show you will permanently change the way you see the UK housing market. Let's start with something that should have been front-page news but somehow slipped past almost everyone. Last March, buried inside dry technical guidance nobody pays attention to, the Financial Conduct Authority dropped a bombshell, one that is already reshaping who gets approved for mortgages and who gets shut out. Here's what you need to know. Ever since the 2008 financial crisis flipped the global economy upside down, getting a mortgage in Britain has meant surviving a brutal gauntlet of stress tests. Banks don't just ask whether you can afford your payments today. They run apocalyptic scenarios where interest rates suddenly shoot up 3, 4, even 5 percentage points. It sounded sensible after the crash. Protect borrowers, protect banks, protect the system. But here's the twist. We are now in a period where interest rates are going down, not up. Yet lenders have continued stress testing borrowers as if an interest rate explosion is just around the corner. They've been using reversion rates, the punishing rates you get thrown onto after your fixed deal, and then adding extra margins on top. The result? Tens of thousands of perfectly qualified buyers getting rejected because they couldn't pass imaginary doomsday scenarios that had almost no chance of actually happening. So the FCA stepped in. And they essentially said, enough. Banks had been interpreting the rules far too strictly. They must use realistic 5-year forecasts, not disaster movie predictions. And under consumer duty rules, they must stop building pointless barriers that shut out people who can clearly afford to borrow. This isn't a small tweak. It's a major loosening of restrictions that have been suffocating the mortgage market for years. Regulators want movement, more approvals, more transactions, more life in the system. But that was just the start. By July, the FCA rolled out even bigger changes. They streamlined the entire mortgage framework and stripped out mountains of outdated regulation. Remortgaging became faster. Overpayments became easier. You can now speak to lenders without triggering a full regulated advice process every single time. The gates are opening quickly. Then came changes to loan-to-income rules. From July onward, only lenders issuing more than £150 million per year must cap high loan-to-income mortgages at 15% of their lending. Smaller lenders are exempt. In simple terms, more lenders can offer you 5 times your income, maybe even 6, instead of being forced to stick to the old 4 times limit. Combine that with the new mortgage guarantee scheme and the direction is clear. The system wants more buyers. But here's the real question. Is this about making housing affordable, or about stopping prices from falling? Because easier lending doesn't make homes cheaper. It increases demand. And when supply is tight, increased demand pushes prices right back up. Politicians want growth and activity, but credit-fueled growth has a long history of ending in crises. And this brings us to the next massive shift colliding with all of this. Rightmove and Zoopla are reporting the highest number of homes listed for sale in over a decade, a 10% year-on-year surge. On the surface, great news for buyers. But demand only rose 4%. That gap is enormous. For the first time in years, sellers are chasing buyers, not the other way around. Zoopla predicts only 1.5 to 2% price growth in 2025. That's basically flat once you factor in inflation. So why the surge in listings? Because thousands of homeowners locked into ultra-cheap 2020 to 21 mortgage deals are now being hit with payment shocks. Rates of 2% are being replaced with rates 30%, 40%, even 50% higher. Many families simply cannot afford to remortgage. So they're selling, not gradually, but in a wave that's only beginning. Estate agents everywhere are reporting the same thing. Motivated sellers, realistic pricing, properties sitting longer, and homes that once sold in hours now taking weeks or months. This isn't a healthy supply increase. It's a sign of financial strain. The government knows this. That's exactly why they are loosening lending rules, to push buyers into the market just fast enough to keep prices from falling. Because falling house prices terrify policymakers. Property wealth underpins consumer spending, retirement plans, and bank stability. A crash doesn't just affect owners, it threatens the whole system. But while ordinary sellers struggle, something else is happening quietly. Landlords are being pushed out of the market. The Renters' Rights Bill, combined with escalating taxes, is causing a mass exodus. It sounds great, fewer landlords, more opportunities for first-time buyers. But the landlords leaving are the small ones, the ones who keep rent stable and treat tenants like humans. The government's own English private landlord survey revealed the uncomfortable truth. Large landlords, those with 5 or more properties, are twice as likely to evict tenants, far more likely to raise rents, and operate purely by profit metrics. Small landlords are more flexible, more humane, more stable. And they are the ones exiting the market. Who's staying? Big players. Portfolio owners. Corporate landlords. This is the same pattern seen across every industry. Independents squeezed out, corporations take over. Not because they provide better service, but because they can absorb regulation and maximize profit. And this leads to the next shift, the one most people aren't even aware is happening. Ordinary buyers are no longer competing with small landlords. They're competing with institutional giants, BlackRock, Lloyds, Granger, Legal and General. These companies buy entire developments before they reach the public market. BlackRock has even bought stakes in brick manufacturers, controlling not just homes, but the materials used to build those homes. Why? Because housing is one of the safest, most profitable investments on earth. Inflation pushes rents up. Debt becomes cheaper over time. And people will always pay rent because they have no choice. When your landlord is a corporation, negotiation disappears. Algorithms determine rent. Maintenance gets delayed to protect earnings. Evictions accelerate because there's no personal relationship to slow things down. This isn't creating opportunities. It's creating a feeding ground for institutional capital. But we aren't done yet. HMRC collected nearly £15 billion in stamp duty last year, in a slow market. And behind closed doors, policymakers are discussing something far more dramatic, the possibility of a land value tax replacing council tax and stamp duty, targeting homes worth over £500,000. That includes average flats in London and normal family homes across the southeast. This isn't about taxing the rich. It's about squeezing middle-class homeowners. And the consequences could be enormous: forced sales, financial pressure, sharp regional price drops, and potential negative equity. Put all of this together and the picture is unavoidable. The easier mortgages prop up prices. A supply is rising due to forced selling. A small landlords are leaving. The corporations are consolidating power. A new taxes could trigger even more forced sales. These forces aren't separate. They are feeding into each other. The entire system is being reshaped, away from ordinary ownership and toward corporate control. The UK housing market hasn't just shifted. It is being rebuilt from the ground up. The question isn't whether you agree with the changes. The question is whether you understand them well enough to protect your own financial future. Are we heading toward stability? Or toward a system where corporations own the homes, and everyone else just rents from them? If this breakdown changed how you see the housing system, share your thoughts below. I read almost all of them. And subscribe to UK Housing Report so you never miss the next major update. Because what happens next affects everyone: homeowners, renters, and anyone still fighting to get onto the ladder. Understanding the game is the only way to avoid being played by it.